I sold my Texas Pacific Land shares, and in this video I will explain why. If you are new to this YouTube channel, welcome. My name is Christophe Nour. I've been investing in the stock market for almost a decade with a performance of 25% per year. And I love TPL. I love Texas Pacific Land Corp. I made a video a few weeks ago about why TPL was my favorite business of all time. If you don't know what TPL is, I will make a quick introduction, but I suppose if you clicked on this video it's because you want the rationale. This is a royalty business. They own some lands in Texas, and under these lands you have some oil, you have some water. So this is an asset-light business model related to oil, but not only. And they have 90% gross margins. They have not a lot of employees. Look at the revenue growth, look at the net income growth. This is up and to the right. No debt whatsoever. A lot of cash, a lot of free cash flow, and they do some dividends. They did some dividends in the past. They did some buybacks in the past. Now they do some dividends. You get the idea. You are in the situation of having an extremely simple business model. I first bought my shares here in November 2020, so when nobody wanted to touch the stock, basically. And since then, it's what, 8x, 9x. So we made a huge home run on this one. And look at this chart. If it doesn't make you think of a bubble, I don't know what will. Actually, the valuation came to an absolute extreme, and when I bought the stock 4 years ago, the stock had a PE ratio of around 25. Now we are at a PE ratio of 80. So yes, earnings improved, but you get this beautiful margin multiple expansion over the years. And let me go through the past 3 years what happened, and let me do a quick history of the stock price. Because of the geopolitical conflicts, they had a beautiful 2022. All high oil prices helped the company, more profits, more momentum. In 2023, the stock was cut in half, and in 2024, the year-to-date performance is a triple. It's plus 200%. So I came to the conclusion that, okay, this is a magnificent business to own for decades. But this business is cyclical. As you can see from this stock chart, it goes down and then up because of momentum. And then it goes down again and then up because of momentum. And we reach this valuation of PE ratio of 20, 70. PE, 70. So I'm willing to trade the stock. I'm willing to sell it now with a PE of $80. And buy it in a few months, in a few years, when the valuation comes down to 20, 30. That's my goal. And I bought because of the recent inclusion in the S&P 500. So basically, I think it's another oil company that will be booted out of the S&P 500, and TPL is large enough to become part of the S&P 500 right now. So a couple of days ago, TPL had a 15% gain in one day. And most of the time, I'm not very confident that the recent inclusions into the S&P 500 are great performance. You can take the example of Salesforce a couple of years ago. That was included in the S&P 500, and at the time of the inclusion it was a great stock, great investment, and since the inclusion into the index, the stock only went down. So you have some momentum, this is some good exit moment for me. I think it's a good time to sell TPL because the valuation is so stretched that it doesn't make any sense now. And the business has not changed at all. We are talking about a royalty business model, high margins, long runway. They have been in business for decades. I mean, the business was founded in 1888, so a couple of more than 1 century ago, 150 years, something like this. So yeah, the business model has not changed, and actually the future prospects for the business have improved because now Texas is a land where you can build a lot of data centers. Basically, if you want to do a bet on AI, you can invest in Nvidia, you can invest in chips, you can invest in Google, Amazon, something like this, or you can invest where the data centers will be built. And Texas is a great geographical area where you can build data centers because you have a lot of space. cheap energy and some oil water treatment to cool the data centers. So TPL does everything. They are located in the Permian Basin, extremely good geographical location. They are just owners of the lands, and I don't see the business model changing. Why is the business so high? You will maybe ask this question. There is a lot of momentum in the stock, a lot of bullishness. People think that Texas Pacific Land is no longer an oil company. It's a AI company now, because they will focus on AI data centers for the next decade. So this is definitely an industry that will benefit in the coming years, that will thrive in the coming years. And anything that is related to AI is going to the moon right now. So maybe TPL is in this AI momentum. Second thing, all the royalty businesses right now are having great tailwinds, and valuations are going up and up and up for royalty companies. And third point, the big business is becoming large enough so it gets some recognition. When I invested 4 years ago, the market cap was $4 billion. Here, nobody knew the stock. I mean, I didn't see any videos on YouTube about the stock. I didn't see many interviews, articles written about TPL. And when I invested here, the stock had done nothing for the past 3 or 4 years. It was boring. It was oil. We had negative oil prices in 2020. Nobody wanted to touch the stock. That's where I got interested in the stock. Now it seems like I hear more and more articles. I read more and more articles, more and more people talking about it, YouTube videos, etc. Actually, when you do a screenshot of your performance and when you are very proud of your investments, that is a very good time to sell. When I see a lot of people sharing their gains about TPL all day long, all week long on Twitter, oh, look at this, I'm up 20%, 30%, 40% this year, I'm up 100%. That is such a warning signal for me. So now we reach to the valuation of 80. I mean, what I just said about the valuation fluctuating, I can show you exactly what I mean. I'm on Stock Unlock right now. Let me go to Freeform, and I will show you the PE ratio over the years, how it is evolving. By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video. For the past 10 years, PE ratio was 50, back to 20. 70, back to 20. I bought here. Boom, here. P of 16, 17. And then it shot up, P of 80, and now back to 30. And now 50, and now back to 20. And now we are 80. If the past is a very good indicator of the future, it is very likely that the valuation will come down. Well, I don't have a crystal ball, so I'm not 100% sure, but that would be my strong guess. My strong guess is the earnings will not grow drastically. They will grow, but as always, as they did in the past, the revenue will not grow drastically. They will get more deals with data center stuff. They will get more deals normally. The water business will continue to evolve, high margins, and nothing will change. So the only thing that can boost the price up is valuation at this point, because either earnings have to follow to catch up or valuation has to come down. My strong guess is valuation will come down, but I'm not in a hurry. Actually, businesses that are expensive can become much more expensive. Instead of having a PE ratio of 82, we can have 92, 102, 112, 122. I'm not in a hurry. Just psychologically, I prefer to be comfortable with my portfolio and sleep well. Now with TPL reaching extreme valuations, I'm not sleeping well. I'm saying, okay, I don't want to. I want to be comfortable with my money, with my portfolio. So let me just sell and find something else. Lucky me, I have found something else. So that's good. And if you look at the past 20 years, yep, you have this cyclicality. 20 back to 40, 20, yeah. You always had this cyclicality. And actually, we are on a PE ratio, looking at this. That's the first time I see this, by the way. All-time high for PE ratio. All-time high for PE ratio. It means that the expectations for the stock are at all-time highs. And I don't think, I mean, you can argue, yes, valuation is expensive, but because the prospects for the business, the future revenue is insane, you're completely dumb, Christophe. Maybe I'm completely wrong, but my strong guess is earnings will not grow that much. Revenue will not grow that much. Free cash flow will not grow that much. They still have some governance issues, and everybody is forgetting this, but I don't see them changing drastically over 2025. So yes, for the remaining of the year, for December, if you want my short-term guess, if that's valuable to you, you still have this big momentum. So it is likely that the stock continues to go up in December. I don't know. But for 2025, that may be a different story. Maybe now you all ride the wave because that's cool and we all make money, and until you don't. So we will see in 2025. I would love the stock to go down in 2025, like big cut in half. So you reach a valuation from 80 to 40. If earnings increase a little bit, you reach a valuation of 30. And honestly, I would be comfortable buying at a PE of 25, 30 again. And I would gladly put 10% of my portfolio. But yeah, look at this. If I do a DCF on this one, if I do a DCF, let me check if the stock is undervalued or overvalued, so you can really understand my point. Okay, if I have to forecast no, you have decreased in free cash flow recently. No, I want to check net income, much more stable, just for the sake of the exercise. If you want to forecast the net income for the company, the earnings, for the next 5 years, you think they will grow what? Over the past 5 years, they grew 7-8%. Let's say they grow 15%. Okay. Let's say we don't have any buybacks, no dilutions, dividends, I don't care. And let's say the PE ratio for the stock is 30. If these are your assumptions, the stock is overvalued by 100%. The fair value is 50% below. You have to drop 50%. But if you think you are very confident and you think it will go 25% and it deserves a PE ratio of 35, if you think extreme bullishness, you are still overvalued by 20%. I see better opportunities, way better opportunities, and I'm not confident at all about this expensive valuation. The PE ratio has grown a lot. The stock has grown a lot. Now you have a lot of fame. Now you have a lot of articles. Now I see more interviews, experts about TPL talking good about the valuation and the business model. These things were true 2 years ago. Still, nobody wanted to touch the stock 2 years ago. So I'm worried for the stock in the short term, and I just sold completely all my shares. I prefer it this way. And you can argue that there are some royalty opportunities more cheap, on a cheaper basis. But that will be something for another video. Yeah, that will be my take, and I will keep you updated for the TPL position, but so far I'm not in the stock and I'm not willing to go back into this position until it drops significantly. If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, in this coaching program, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you have any questions, I'm here to help. Click the first link in the description below to get more information. You will get a short video that explains how everything works completely for free. No need for your mail address. Just click the first link in the description and I'll see you on the other side.